Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is May 7th, 2018, and I'm going to look at gold tonight, the ETF being GLD. We've got the short, intermediate, and long-term trends all pointing to the downside, and we have a mixed technical. And what's kind of interesting to me is the fact that we have a tight support resistance level here. And there's kind of a mixed bag going on here. That's why I'm really trying to pay attention to this particular market. The other thing that's come up here is we had a pulse low that occurred in gold, and that triggered today. So this will give you some perspective. First thing is this. Let's just kind of look at what the systems are doing. One, we have a kind of a mixed bag here when it comes to the systems. We have a new short that just triggered here, tail end of the day. We had three long positions that two of which went long today, another one that went long today. So there's barely any money being made, but there's definitely, as I've mentioned, a mixed bag here. And what's basically taking place here is that we've had a spot where the market has come down. In fact, I'm going to show this to you. Here is one system. It's an Arcturus 240-minute base system that liquidated a short position. And what I want to do is I want to show this to you here first and show you the Arcturus system. Here is that particular trade where it went short the market on the 19th of April and has been short. This is 240-minute bars and has been short this entire time frame. So I had a nice little $3,000-ish profit in this particular market. Now it did liquidate its position with this little thrust, and we've had some other trades that have taken place here during the course of today's action. Now, where do things stand right now? Let's take a look at the market as a whole, and I pointed out that there's a tight support resistance level. The support is brand new. That's basically right through here, that number being 1310, 1310 for the support to the market, this blue line, and it's building, and it's looking good. It's got a 32, which is relatively strong. We also, having to go back in time, you can see that we have a 34 here with this magenta line, and we have a 13 right through here. And if we kind of connect these two, they're not exactly the same, but if we connect them all the way across, you'll see that today's high ran up against resistance. The support has triggered back here in March, as well as the low, well, the closing lows, if you will, right through this particular time period. So we're in a tight consolidation to the market. The other thing I'll point out here is that we also have, on an energy basis, gold has been picking up. So it's not at the high of the list here, but it's still pretty darn high. It's 1, 2, 3, 4, 5. It's number 6 on the list of 40-odd markets. So the period of time that we're in right now, that the energy, the velocity, the however you want to talk about it, as far as the just the thrust of the market, is beginning to pick up here. So what we want to do is we want to look at this particular market specifically from the standpoint of the support resistance levels, the support that we're at right now and the resistance that we're at right now. You can see that the if we look at this resistance at 1320, the low 1310, we get a 10-point swing between the low and the high. That these are important support and resistance levels, and this is not going to hold here. So the systems, as things stand right now, are for the most part in a period of flux where we're establishing new positions on the short side, we're establishing new positions on the long side. Net, we've got, as we speak right now, having liquidated that one Arcturus system, this 240 minute, which is now flat the market. So if that's to the sideline, we have one new short and we've got 3 longs. So net, we are long the market here with 2 long positions. And so the reason I point this out is that, one, we're in that support resistance level where we have the low and the high at 1310, 1320, and the other thing I want to point out is that the systems actually trade pretty darn well, where they're able to liquidate certain positions, the 240 minute bar of the system here, and take some profits. And then, if necessary, as it did with the 120 minute, going from a 240 minute bar to a 120 minute bar system, that it's able to reestablish things. Obviously, you can see that we had 120 and a 90 minute based on swing based systems that we established in new positions. So things are in a point right now that if you're looking at this particular market and you're looking for a trade, the long side is the way that the systems are trading this right now. I've given you the support and resistance. There's a flux between the longs and the shorts, meaning there's a hedge going on here and that they're protecting one another. If the market should rally, we would expect this 120 minute bar system on the short side to liquidate itself with a small loss. If the market were to rally to the downside, then I would expect that some of these brand new systems might liquidate themselves and be able to establish some more short positions out there. I don't know exactly which way things are going to be heading. Obviously, I've shown you from the perspective of the deep dive that and this is long in the tooth and kind of old data, because it's always old data because it's looking at trends to the market. But when we look at the technical rating to the market, I want to point this out. This is critical if you're watching these deep dives on a regular basis. The markets that have this little sideways arrow tell us the market is in flux. The markets that are in flux are in a position where what we'd expect is something big to take place. I've shown you that the majority of the systems are long. I've shown you that we've established new shorter term systems going from 240 minutes and having taken profits on that one Arcturus system, 3,000 or whatever it was. We've moved that down to a 120 minute bar system that were ramped up and ready for the market to make an explosive move here between the 1320 and the 1310 level. And if we look at the shorts, obviously there's only one position out there, and that one particular position has ratcheted down from 240 down to 120 minute bar. That in that particular instance, we are looking for the potential for the market to head higher. So watch this market. Don't be surprised with any type of movements here between the 1312 or 1320 and the 1310 level. But once we break below or break above that particular level, that's your indication to watch and take advantage of what the systems are showing to us, and see if we're establishing new long positions and exiting the shorts, or if the market rallies to the downside, the reverse, unwinding the longs and establishing some new short positions. But whatever the case is, we have that tight consolidation when it comes to the support and resistance level. Energy level having been picking up as of late, I would expect that we're going to see a really nice move here. We have some news that's going to be coming out here in the next day or so when it's related to the Iran deal and some other things that might be popping up. Just realize that there's ambiguity when it comes to certain things, so that 1312, 1320, and 1310 level is of critical importance. So watch gold, take advantage, and we will look at another market tomorrow. Thanks.